Good morning, good evening, good afternoon, depending on where you are in this world. This is Hedging Lee with a morning update for Bitcoin. So the leading diagonal did not turn out. And this whole count is a ABC zigzag, 5, 3, 5. And this ABC topped at the 65.83. And now I think we are looking at a wave 3 down at a minor scale. And what I mean by that, probably have wave 1, and then wave 2, and I think we're looking at wave 3, which should go lower low than the 6,094 or so. And this is also showing, obviously, that the bottom trend line support has been decisively breached. And this 1, 2, 3, 4, and 5 could be so that wave 3 is just a little bit below the prior low. However, if you're looking at the subwaves of the current wave 3 down, if you have wave 1, 2, 3, 4, and 5, I think it'll be below the start of this rising ascending wedge. And this bounce was very weak, apparently. That means that we've got this ABC bounce and a decline to a lower low. I think we may even make it to a new lower low. My primary target still remains the 5,200. It may spike to 4,700. I don't know exactly where. No one does. However, I have been calling for this lower low for a couple of months now. And every bounce, for anyone who had no cash, should have been used for farming for cash. That's how I've been advising my direct clients. And ladder in. So even now, my ladder rung, buy rung for the Bitcoin has not triggered a recent trade. A rung has not been filled. Not until we get a lower low. So if that's the case, then I eagerly await for the lower rungs to be filled at a much better price. So here is the primary. We are seeing a spike in volume, not in green, but in red, above the trend line. And that is not bullish for the short term. Price had been well contained within this blue price channel. So we've got 1, 2, 3, 4, 5. So 1, 2. We need now 1, 2, 3, 4, 5 for 3. And I think that'll bring us to maybe the 5,500s, the mid 55s. And if this ending diagonal plays out, so far it has. We've got 1, 2, and if it just crashes through that, way past the 5,200, then this ending diagonal is probably invalidated. And that invalidation will mean that this just goes way below, even past where 5 is supposed to be. But I don't think that'll happen. So we're still sticking with the ending diagonal of 1, 2, 3, 4, and 5. There may be a little more variations to this, but overall, it should keep this downward wedge pattern. The key confirmation of the diagonal potential for the ending diagonal is for 4 to overlap with 1. Oops. And when 4 overlaps with 1, that is the key confirmation. That is why if this just falls down, it'll be way too high for that 4 to reach to overlap with 1. Hence the invalidation point. The overall sequence is this yellow A, B, and C. And this C wave must have 5 subwaves. Even if the ending diagonal becomes invalidated, this C wave having 5 waves, wherever it might be, 5200 to 4700 or so, will not be invalidated. It's just that that 5 waves, the subwaves for the yellow C, needs to be repathed in a new pathway. Instead of an ending diagonal, it'll be a simple 1, 2, 3, 4, and 5 impulse motive. That is the primary count. And here we have the mid-cycle bottoming at around the 20th in a few days. And this is what could take to the 5200. And if that's the case, then the current decline should decline into that set point. Note that the 0.786 currently on the Fibonacci lies at around 4648, 4700, but in this case more precisely 4648. I'm using 4700 based on the local support resistance zones, and the 5200 using the Fibonacci, analysis of which I had already shown before. Can we still get a right translated peak? Potentially. Just like here. This could be the fractal of what you're seeing here. You're seeing an ABC. It may be an ABC as well. Here was a little bit of an older chart. I had been predicting 65 to 6800. We need to put the C over here, 2 over here. I think 3 down is in progress now, has been onset. Most likely that left shoulder, head, right shoulder is invalidated already. And I think for the next few days we will see lower lows coming up. This 1, 2, 3, 4, 5, the white, will soon be invalidated if price goes below 61.20. However, that the pattern will not be for the alternate count. So it's approaching, fast approaching, the invalidation of the Elliott wave count for the alternate scenario. The green will also be invalidated, but not the pattern. The pattern will continue, even if it pierces and comes back up. Or we have to redraw this a little bit to a wider girth. In other words, extend the basin phase. But I think soon it just might get invalidated. One thing has been very clear in any kind of these bounces. Look at all of these bounces here. Declining volume bounce, declining volume bounce, declining volume bounce, and yet further declining volume bounce. we had maybe a little bit of a hope, a little bit of hopium, saying that maybe it's inclining on this side. But again, we've got another bounce on a declining volume. That is not bullish. That is basically volume is telling you that the trend is bearish and has been bearish. The bottom is not yet in. The trend reversal point has not yet been hit. And soon, I will be invalidating this alternate scenario, I think. Without that volume, this wave 3 had no hope. 3 of 3. Now, these are all short-term assessments. For the long-term holders, for the ones who have the horizon of 2024, 2026 or so. Soon, I can't see a better buying time than now. Now until 5,200 to 4,700 or so. Here's my long-term perspective on a semi-log chart. Again, I've been asked, what is the difference between a log and a semi-log? It's very easy. If any of you have scientific or data collection background, you know that when you have data that's like flatlined, but there are differentiations, just you can't visibly see it. And that flatlining happens because there's a huge variance between the variation of price data points currently that are very large in range versus very small range in data points. And you can't see this. It's very hard to compare this flatlined multi-year price action to the current. And therefore, semi means you log the price y-axis, but you don't log the time x-axis. You leave it linear, except the y is set to a logarithmic delineation. That is why it is semi. Semi in that only one axis is logged, while the other axis is kept linear. Now, if you have even much smaller differences that even a semi-log will not help you, then you need to go to a log, where you have a log on both axes. But for price charting purposes, most flatlined regions can be normalized to easy comparison with the high price range region by semi-log. Now you can see, and now you're able to see the differentiation between the flatlined region and the region of very large price range. So I hope you understand that. I hope that's understandable. Having said that, from a long-term perspective, by Elliott wave, pattern, and fractal, it seems to me that the midpoint of this rounded price formation of the 2014-15 correction had it at around this point, okay, mid-July of 2015. And just visually speaking, and I'm just using the contours of the price to draw this second fractal rounded price formation, which might be as the blue line or maybe a wider girth as the yellow line for the right wall. In combining patterns and Elliott waves, I've always believed that the left wall of the rounded formation is built on a corrective sequence, in this case WXYXZ. Then there's a flat line area, or no, I'm sorry, where price goes sideways, called the basin phase. And that sideways is composed hybrid of corrective and impulse, usually early impulse of the coming trend reversal. The right wall is always built on an impulse sequence. Now, translate everything to here. We have been counting W, X, Y, X, Z. The left wall is built on a corrective sequence. It's in fact labeled the same way in the triple combination W, X, Y, X, Z. The basin phase. The basin phase is when price goes sideways and is composed of a corrective, and once the nascent wave 1 and 2 of the coming impulse can be seen, that and the corrective will make the hybrid of the basin phase complete. Then the right wall will be built on the remaining 3, 4, and 5 impulse sequence. Now this white line, horizontal line, I drew it from the left wall peak to match the right wall peak. Symmetry is very important in patterns. Better the symmetry, more reliable the pattern. So I've done the same thing here. So at 20K to 20K. Now, if this fractal comparison composed of LA waves and patterns come out to be true, or adheres even to 70 or 65%, it tells me, just like it did here, that the terminal end of this correction, first half, or the bottom of this correction, is pretty close. This is when I would have been casting a buy ladder. Translate that to here. If the contours, whether it's in the blue or the yellow, this might have a bit of a range of left to minus somewhere. If the midpoint or the lowest point of the correction is coming at 5,200 or 4,700, then we are at the terminal end of the correction towards its lowest point. That is why I've already cast my buy ladder. And in my 21 years of experience, I have learned that the best time to buy is at the terminal phase, at the terminal end of any major correction. And this is exactly that case right now, as it was back in the 2014 correction. Now, why is it smaller? Why is it shorter now? Well, I think it has a lot to do with the network effect increase, enhancement in the maturity of its liquidity. There's far more exchanges trading it, far more people involved, and that'll get even more. So that, right now, visually speaking, is being reflected in how this current pattern is about half the size of the prior pattern. So this is my long-term perspective, and this is my long-term greed assessment, and this is what my playbook. I'm not doing it based on the micro counts. And I think this is the better way to do it. Okay, I hope you all have a safe, patient, disciplined, long-term greedy outlook type of a day. Thank you.